Hey guys, rmillerloans coming at you with a mortgage tip. So if you are debating whether to go FHA or conventional, you should definitely watch this and understand the minimum standards of each one and why, depending on your profile, why you should go either way. So the minimum credit score for an FHA loan, to put as low as 3.5%, is a 580 credit score. Understand you're not going to get the best possible interest rates. To get the optimal interest rates or even FHA, you want to be above 640. The minimum credit score for conventional is 620. Reality is that you still need everything to sparkle in order to get an approval for 620. Realistically, you do need to be above the 660 range to get a decent interest rate. Ultimately, the minimum down payment for FHA is 3.5%, opposed to conventional being as low as 3 to 5%. The difference is what we call the upfront mortgage insurance premium, which it is a fee that gets put onto the FHA loan and it gets financed. There is no upfront mortgage insurance premium for the conventional loan. So that is a positive. Now we're talking about the monthly now. The monthly mortgage insurance premium is a factor of 0.55% for a FHA loan. Now, conventional, there is a scale. That scale depends on where your credit score is. The lower your credit score, the lower that down payment. It keeps on going up, 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 up. If you have phenomenal credit scores, then you potentially can get a decent rate that's close to the FHA loan. But reality is, let's factor most of this in, is that majority of first-time home buyers do not have 740 plus credit scores. So I'm talking to most people that are out there in America where they have, middle to moderate credit, mid to high 600s. So let me give you this example. If you are buying a $650,000 home in today's market and you have a 640 credit score, on an FHA loan, you're going to get an interest rate, say, around 5.875 today. On a conventional loan with that same credit score, your interest rate is about 6.75. That's a big difference, almost a full 1%. On top of that, the mortgage insurance on the FHA side is 0.55. The mortgage insurance on the conventional side is a factor of, don't quote me because this is a private company that could be different depending on the few, but let's give it at a rate of 1.1. So at 1.1, you're talking about a mortgage insurance of $566 monthly, which is extremely high. And you're talking about a monthly mortgage insurance for FHA of $287. $287 opposed to $566. You're talking about $278 difference in just mortgage insurance. On top of that, the difference between the two payments, FHA, you're talking about $39.72. Conventional, you're talking about $45.71. So we're talking about a almost $800 swing depending on the loan. And then you have some real estate agents like, oh, go conventional because we think that it's better because I don't know why. No, understand, agents that are out there, stop giving mortgage advice to people if you don't have a MLO license. Ultimately, even if you do have an MLO license, that you've been in the business only a year or 2 or 5, and you haven't really dug into the numbers, don't give that advice either. Because I would say 9 times out of 10, an FHA loan is better for a first-time home buyer, only because of those numbers, especially if they don't have the best of credit scores, which that's the majority of the public. So if you want an honest approach, back in the days, if you're dealing with a mortgage bank and not a mortgage broker like myself, some people used to get compensated more if they push you to the FHA or the government loans. And that still might happen for mortgage bankers, but not for mortgage brokers. We get compensated, doesn't matter what program we put you in, we get compensated the same. So please make good, informed decisions. And if you're out there, make sure you reach out to a mortgage expert. Listen, the road to home starts here. So reach out and follow me if you want more details on how to make sure you buy a home responsibly and understand the intricacies of what the mortgage market will give you. Take care.